Hello everyone, this is Tejashwini, and in today's session we'll revise about the deduction from the GTI. Always remember there is difference between the deductions and the exemption. Deduction becomes minus from your GTI, whereas your exemption, that amount will not get into your GTI itself. So that is the difference between your exemptions and deductions. Okay. Remember, when it comes to your normal provisions, that is your other than shifting out of 115 BAC, you will have all the exemptions that you can take, whichever is specified under the provisions. But if you are opting for 115 BAC for your tax payment purpose, then you are not going to get any deduction apart from these three. That is 80CCD2, 80CCH2, and 80JJAA. These three you are going to get. Apart from this, you are not going to get anything. You are not going to get 80C, you're not going to get 80D, you're not going to get 80D, 80E, you're not going to get all those sections. Apart from these three, you're not going to get anything. Clear? 80A represents, so that is, you cannot have your NTI as negative, you can only have it as positive of 0. 80AC speaks about your deductions to be classified under 2, that is under chapter 6A, and that is under deductions under 10AA. Under chapter 6A, it can be further classified as deductions in respect of the certain payments, deductions in respect of certain income, deductions in respect of certain other incomes, and other deductions for that matter. The important section 80C, this speaks about you making an investment, you depositing money in the respective funds, in the respective accounts which has been maintained by the, that is, which has been specified as per the act. If you're investing money over there, then you're going to get deduction under section 80C, and 80C, 80CCC, 80CCD combined. Remember, the maximum deduction that you can take is 1.5 lakh, and this has been explained in section 80CCE. See, all these points, insurance plan, you have invested any money in the LIC mutual fund, and you invested any money in the life insurance policy, that is, you paying the premium. Remember, if the policies are issued before 31st March 2012, 20% of such some capital assured only allowed as your deduction. If it is on or after 1/4/2012 but before 1/4/2013, 10% of the actual capital sum is assured. On or after 1/4/2012 but before 1/4/2013, if the person who is insured is a severe disabled person who is getting deduction under section 80U and 80DDP, that fellow can get 15% of the capital sum assured as the maximum deduction. Otherwise, for the other category, it is going to be 10%. And apart from that, there are many other points. If you are investing in a deferred annuity, you're making any contributions in the SPF, RPF, and PPF, you have made any money deposited in the approved superannuation fund, in Sukanya Samriddhi scheme, National Savings Certificate, you invested money in the LIC, in your mutual fund of UTI, notified pension scheme, your contribution to the National Housing Bank, payment of any tuition fees which you have made, repayment of the housing loan including the stamp duty, registration fees and other expenses, investment in 5-year deposit scheme, subscription to the notified bond issued by NABARD, investment in the 5-year post office time deposit, and deposit in the senior citizen savings certificate, contribution to additional amount under NPS. All these points which you have seen, all these are going to be considered as your deductions. If you invest money over here, you will get deduction. 80CCC speaks about you making any investment, in the pension funds. 80CCD speaks about making any investment in the pension fund, but now these pension funds are notified by the central government. Now, when it comes to contribution which is being made, the contribution can be made by employer and the contribution can be made by employee also. When the contribution is made by employee, then you will get the deduction under 80CCD fund. If the contribution is made by employer, you will get the deduction, but first it should be added as your income and then you will take deduction under section 80CCD2. But there is a restriction provided if the employer who is contributing is a central government, that is central government itself is the employer. Basically, you are a government employee. Employer contributing any money towards your pension fund under 80CCD, which is notified by the central government, you will get deduction of 14% of your salary. And when it comes to your employer being other than the government employer, that other than the central government, then other employer, then 10% of the salary will be allowed as your deduction. 80CCD 1B speaks about you getting additional deduction over and above this 1.5 lakh, that is your 80CCD 1B. See, it's clearly explained here. 80C, 80CCC, 80CCD. 80CCD 1 has 3 classification. 80CCD 1, 80CCD2 and 80CCD1. 80C, 80CCC, 80CCD1, these three combined, you will get deduction of 1.5, which is specified under section 80CCE. 80CCD2 speaks about employer contribution, wherein first you will add to your GTI and then there is a deduction which is allowed. 80CCD1B is an over and above the addition to your 1.5 lakh. That is when you have paid the pension fund and that amount which you have paid is in excess of 1.5 lakh. To the extent of 50,000 you can take, provided you have paid from your, that is provided you have the some money which is paid to the pension fund. So that is going to be your 80CCD1B. Clear? Now 80CCH speaks about Agnipath scheme. And 80CCD speaks about your medical premium, insurance premium, which you are paying to the central government, to the insurance company, or to any other notified scheme. You yourself, your spouse, your dependent children, you can take a maximum deduction of 25,000. And this is considered as family for the purpose of 80D. For the parents, you will get an additional 25,000, and your parents being a senior citizen, you will get 70,000. And you yourself being a senior citizen, you will get 50,000. Clear? You will get 50,000. Yes, you will get 50,000. Preventive health checkup maximum 5,000 is available, and this is within overall limit of 25 and 50 people. This we had considered. We have to consider this within the 25,000 and 50,000 brackets itself. Okay. Medical expenditure for senior citizen. This is considered as deduction of up to 50,000 rupees. If you have not considered taken the premium as your deduction, then you can take. If you have actually incurred, then you can take up to 50,000 rupees. Clear? And in case of HUF, what will happen? And in case of HUF, remember the insurance premium for the family which you are considering or contributing, which you are considering for the person, and it is going to be for the HUF, 25,000 shall be allowed as deduction. If it is excess of that, if it is, that is, if the person is a senior citizen in the HUF, then it is going to be increased to 50,000. Now, when it comes to the next section, that is 80DD, section 80DD speaks about the maintenance, that is the deduction which is available. If I'm maintaining a dependent disabled, the medical treatment maintenance which you're spending for a dependent disabled, the eligible SSC are individuals and HF. The qualifying limit or the qualifying amount shall be 75,000. In case of the person with the disability, standard deduction, you spend 5 rupees, you spend 10 rupees for that person, still you will get 75,000 as the deduction. Suppose if the person is with a severe disability, then you can get a maximum deduction of up to how much? 1,25,000. 80DDB speaks about, see, DD dependent disabled. You please remember like that. 80DDB is such that wherein medical treatment expenses has been spent either for individual, spouse, children, parents, grandparents, sorry, parents, brothers and sisters, who are mainly dependent on such person for that matter. The quantum of deductions available is the actual expenses which is being incurred. People, the actual expenses which is being incurred or 40,000 rupees, whichever is less, and this 40,000 rupees is initialized with the replaced with this 1 lakh rupees, provided that fellow is a senior citizen. Clear? People, 80C series speaks about the investment series. 80D is a medical related series. 80E is investment related series. 80G is a deduction related series. Please to remember that. Okay. 80E speaks about you making any interest payment. Any interest becomes payable for a higher education. It can be for yourself or it can be for your relative or your family, anyone. 80EE speaks about deductions with respect of interest which is payable on the loan borrowed for acquisition of residential house property by an individual. People, this interest payable on the loan borrowed, you will get deduction under section 24B also. Please remember, in case of section 24B under your income from house property, over there you were getting the deduction, right? If you have not watched those revision series of income from house property, PGPP, capital gain, everything is been uploaded. You can watch those videos in the my channel. Under section 24B, you will get interest deduction under the income from house property, right? Over there, you are getting your entire interest deduction under section 24B for your LOP. LOP, whatever it is payable, you will get deduction over there. But in case of SOP, you had restrictions, and based on satisfying all the three conditions, you were getting only 2 lakh rupees as your deduction. Now, this section becomes an advantage to you because this is in addition to this section 24B. So, in order to get or take advantage of this section, which is ATE, where the maximum deduction available is 50,000 under this section, you need to satisfy these four conditions. What are those? The value of the house shall be less than or equal to 50 lakh, and the loan sanctioned during the PY 1617 only. The loan sanctioned shall be less than or equal to 35 lakh. The assessee should not own any residential house on the date of the sanction of loan. All the conditions satisfied, you will get deduction. We are doing the revision series, people, so we are sticking just with the revision. Detailed explanation will be provided in the regular sessions. Not okay. ATEEA speaks about the deductions in respect of interest payable on the loan borrower, and four conditions which need to be satisfied is stamp duty value of the house which is less than or equal to 45 lakh. Loan that should be sanctioned with the financial institution should be between this date only, 2019 and 2022 only. Individual should not be eligible to maintain the deduction under section 80E, and the individual should not own any residential house on the sanction of loan. All the conditions satisfied, ATEEA, you will get the maximum deduction of 1,50,000 rupees, and this is in addition to section 24B. ATEEB speaks about deductions of interest in respect of payable for your purchase of your electric vehicle. Loan should be taken for purchase of an electric vehicle. Loan should be sanctioned between 1/4/2019 and 31st March 2023. Loan should be sanctioned by financial institutions, bank or this specified NBFC, and assessee should be an individual. All the conditions being satisfied, you will get a maximum deduction of 1,50,000 rupees under section 80EEB. Clear? Next. Next, when we are speaking about the next section, that is ATG, remember this ATG has four categories. ATG speaks about the donation series. Entire ATG, normally speaking, it's a donation series. Section ATG speaks about you making any donation to funds, to charitable activities, institutions, etc. See, ATG basically has four categories: category 1, 2, 3, and 4. How to remember this list which is there in the category 1, 2, 3, and 4 over here is very simple. First, come to category 2. You have only one in that. Prime Minister's Drought Relief Fund, that is going to be 50%. Category 3 and 4. Category 1 and 2 primary classification goes with the funds people. Category 1 and 2 primary classification is funds. Category 2, category 3 and 4 primary classification is you making any donations or contribution to trust or institution. You making any contribution to funds, basically you see the fund is coming under Prime Minister's Drought Relief Fund. If the answer is yes, take 50% of whatever the donation you have made. If you made donation of 1 lakh rupees, then take the 50% of it. That is 50,000 as your deduction. Simple as that. No problem for life. Suppose you make it for any other fund, it is going to be 100% of the donation. What is it going to be, people? It is going to be 100% of the donation. 100% of the donation, that is, if you make 1 lakh rupees donation, you will get enter 1 lakh rupees as your deduction. That is 100% of the donation allowed as deduction. Clear? Now, any other fund, 100% of the donations, 50% of the donation over here. Trust or the institution is going to be two things. That is the promoting family planning. Trust, or if you're making any contribution to any trust or institution, and the trust and institution is with the objective of promoting for family planning, then 100% of the qualifying limit is available as deduction under category. Under category 4, it is going to be 50% of the qualifying limit that will be available as your deduction. If I'm speaking about 100% of the qualifying limit, people, understand one thing. There are 5 steps that you need to consider to calculate and classify this as your qualifying limit. If you consider those qualifying limit, then very well, fine, you'll be able to do the complete the question. If not, no. Category 1, 100% of the donation made. 1 lakh donation, 1 lakh deduction. Category 2, 1 lakh donation, 50,000 rupees deduction. Category 3 and 4, you have to calculate qualifying limit. Whatever the answer you get in that qualifying limit, 100% you'll get there, 50% you will get here. Clear? See now, category 2, though you will understand. Category 1, remember, if you're getting any funds, making any donations in the funds, and that fund is not there in your category 2, that is Prime Minister's Drought Relief Fund, directly come and classify it as your category 1. That is 100% of the donation available. In case of you making any contribution to trust or institution? First, to see whether it is for family planning activities. Answer yes, take it as 100% of qualifying. No, take it as 50% of qualifying limit. Simple as that. No. How do you compute your qualifying limit? Is simple. You have five steps. First, you have to calculate ATI. What is ATI? GTI minus all deductions except ATG. Because you're calculating ATG only, people. So how can you take ATG over there? It will be a loop, no? You're doing all these things to calculate your ATG. So all deductions except ATG minus your long-term capital gain minus your short-term capital gain under section 111. Step 2 would be calculate 10% of your ATI. Step 3 would be calculate the total donations you have made only coming under category 3 and 4 above, not anything else. Step 4 would be lower of your step 2 or your step 3, out of these two, whichever is lower. Your step 5 would be whatever the amount which you have considered as your qualifying, that is qualifying limit, which you got as answer in your step 4. Your step 4 will be your qualifying limit. You need to adjust this against your category. You should adjust this against your step 4 and you should adjust this with your donation. Suppose you have made donation under category 3, that is 100%, and you have made category 4 donation, you have to adjust that amount against the category 3 first and then give the remaining amount under category 4, and then you should give the deductions over here. Now, let's take a simple example. Okay. Let's consider the step number 2. That is the, let's consider the actual donation which you have made is category 3 60,000 and category 4 is 30,000. And the adjusted total amount which you have considered, the ATI which you have got is 3 lakh in my example. And 10% of that 3 lakh would be considered as 30,000. So 30,000 or total of 90,000, whichever is lower. Obviously, your category classifying limit would be 30,000 only, with least of the above. And in the respect of this, the adjusted first, that is, you have to adjust 100% of your qualifying limit. What is your 100% of your qualifying limit? 30,000. That is, category 3 will get 100% of the qualifying limit. Category 4 would come up to 50% of your qualified limit. 100% of the qualifying limit would come up to 30,000. The entire qualifying limit, which is the total of 60,000, this is the actual donation made. This is the actual donation made. First, you will set off the entire amount of your qualifying limit against your actual 100% of the qualifying limit deduction. 30,000, you will get the entire 30,000. Suppose, just an example, the qualifying limit, let's consider this is 1,20,000. This is 1,20,000. You suppose, just an example, the ATI answer which you got, 10% of your ATI is 1,20,000, 90,000, whichever is lower. What you would have considered as your income, people here, my qualifying limit would have been 90,000. So now, actual donation being the same, won't you get the full deduction, full donation as your deduction? Yes, you will get the entire 60 lakh, and here actual donation is so much, qualifying limit 30,000 you will get. Out of that, only 50% you will be eligible. That is going to be 15,000. So total donation that will be eligible for deduction under section 80G would be your 75,000. This is how you calculate your qualifying limit. If you want to know more about how to calculate the exact qualifying limit, the questions have already been posted in the channel. You can go and watch over there. And for whatever the revision, whatever the classes which you are seeing, if you want the material or if you want the free resources, you can join my Telegram channel. It is available over there. So this is about your 80G. Remember, if you're making any donations, if you're making any contributions, that is a donation in excess of 2,000 rupees in other than account paycheck, account pay track, that is if you're paying it in cash, then it is going to be fully not allowed as deduction. Clear? 80GG deductions in respect of the rent paid. People, remember, in respect of the rent paid, if you want to get the deduction, then you shouldn't own any house. The assessee shouldn't own any house. And the quantum of deduction that is available is the actual rent minus ATI. ATI you already know over there. ATI for 80 double G shall be ATI is equal to GTI minus all deductions except 80GG minus LTCG minus short-term capital gain under section 111. 25% of your adjusted total income, we already know. Fixed amount of 5,000 per month. Least of the following would be allowed as your deduction. 80 double G A is with respect to if you're making any donations to scientific research and rural development, that is other than the assessee who's having business income. Or if you're the person who's having a business income over here, you would get your deduction directly under section 35. Here, you are the person without any business income, but you have made contribution. You will get the entire 100% of the donations made under section 80GG. 80GGB is the brother of 80GG, wherein deductions in respect of the contribution given by companies to the political parties. If the companies have contributed anything to the political parties, then the deduction is available. 80GGC, if there is anyone that is other than company by any person to political parties other than the company, if they are contributing, then under 80GGC, they will get 100% deduction. Deductions in respect of certain income. Remember, 80JJA speaks about deductions in respect of the new employees who have joined into the organization. The new employees who have joined to the organization, won't we give them the salary? That salary is called as emoluments. If the emoluments is up to 25,000, and the people, you should have worked for a period minimum of 240 days, and in case of leather company, if you have worked for a period that is up to 150 days, and you should have been recognized and registered under your recognized RPF, then you would be considered as eligible new employee for the purpose of computation. Then your salary would be considered as deduction for the companies, that to 30% for 3 consecutive assessment year. This year you will take 30% of the amount. Next year you will take the 30% of the first year amount. Next year 30% of the first year amount. The same thing keeps on continuing, and you will be considered further. That is your 80 double G double A. Everyone. 80 QQB respect in deductions in respect of the royalty income of the others or certain other incomes for that matter. Now, deductions in respect of the royalty income. First of all, the deduction which is available for you is with respect to royalty income that you earn. You will get the expenses deductions also. You will get the royalty income earned or 3 lakh rupees, whichever is less, as your income. First of all, you will add that income under your income from other sources, and then you will take deduction. That is, maximum deduction shall be the royalty income or 3 lakh rupees, whichever is less over here. Clear? Any total amount that you can't that can deduct can't be more than 15% of your value of the income. See, 80 RRB is the brother of 80 QQB, wherein deductions in respect of the royalty on patents is available. Maximum deduction that you can take is 3 lakh. It is similar to that of your 80 QQB. Deductions in respect of certain income. 80 TTA speaks about deductions in respect of the interest on deposits in savings banks. The savings bank interest can be from bank, from post office, or from cooperative society. Anything from these three, you are getting any interest income, you are going to get deduction of up to how much? 10,000 rupees in aggregate. 80 TTB is the special provisions wherein you will get interest deduction from FD and savings bank account, and that too only for senior citizen. Maximum which is available is 50,000 in this scheme. Other deductions which is coming under the section is 80U, wherein deductions in respect of person with a disability is considered, and type of disability. If the person with a disability is 75,000 flat deduction. If the person with a severe disability, that is a flat deduction of 1,25,000 is available. 80 double J double A, deductions in respect of the PGBP income that you are getting from biodegradable waste. 100% of such amount is allowed as deduction. In respect of 80M, deductions in respect of intercorporated dividend, that is which is applicable to the domestic company. And the quantum of deduction which is available is dividend, whatever the amount you have received, dividend distributed within the due date, and due date means a month prior, that is a month before the due date of return furnishing. If your due date is 31st of October, then the last date to get that is declare this dividend and do classify this amount is going to be before 30th of September. That is, you should have distributed the dividend within 30th of September in order to get the deduction under 80M. 80PA, that is deductions in respect of the income of the producer companies, that is 100% of the deduction is available. And the next very important section comes is deduction under section 10AA. Deduction under this section 10AA is going to be very simple. 10AA speaks about the deduction that is available if you have registered as an SEZ. SEZ under the Special Economic Zone Act 2005. If you have registered under that, you will get the deduction under SEZ under your income tax under section 10AA. 10AA section states that the export profit which you get, you can take the deductions on that export profit provided you are an SEZ. The formula to calculate that is going to be very, very simple. That is, whatever the profit of the unit in SEZ, This profit of unit in SEZ is the total profit which is earned. If it is total profits for the total turnover, then how much is for the export turnover? You will get 10AA deduction. Understanding, people? This 10AA deductions you will be able to compute. Remember, from first year to 10th year, you will get 100% of the profits so computed in the calculation. If you are in the 6th to 10th year of starting your business, you will get 50% of whatever you have computed over there. And from 11th year, subsequent is nothing but 11th to 15th year, you'll be able to get the deduction of up to 50% of the profits over there. 50% of the profits or 50% of the profits or the amount which you have transferred to the special, that is special economic zone reinvestment reserve account, whichever is less will be allowed as deductions under your 11th to 15th year. Clear? This is about your deduction chapter. Thank you.